This is the Skin in the Game VC podcast, hosted by Tom Wallace, entrepreneur turned venture capitalist and the managing partner at Florida Funders, along with Saxon Baum, general partner and head of investor relations at Florida Funders. You'll learn from the best about investing in early stage tech companies, so you too can gain the confidence and find the tools that help you succeed as an angel investor. Are you ready to get some skin in the game?
Hello, my name's Tom Wallace, and welcome to another edition of our Skin in the Game podcast here at Florida Funders. I'm here with Saxon Baum.
Tom, how are you? Great to see you.
Great to see you, Sax. Got the election behind us. Finally got that.
Yeah, got the election behind us, and it was a doozy.
Yeah, it was. It was, and we can get into that more. But before we do that, we have a guest today, as we always do, and I'm excited about our guest. And so very different guests for us. Joe Hogue is here with us. Did I say your last name properly, Joe?
Excellent.
Joe is an investor, which we're used to having investors on, but he's a very different twist to that. So I'm going to let him. Joe, why don't you introduce yourself and tell our audience a bit about what you do?
Sure. Well, Joseph Hogue started out with that traditional equity analyst background, transitioned to venture capital, worked with a Canadian venture capital firm there so long ago. And in 2013, I decided, I wanted more time with family and wanted to own my own assets. So I shifted the business to more freelancing equity analysis, as well as blogging, that kind of content creation, transitioned into YouTube almost exclusively in 2017. And it's been great experience. I get to use the same analysis and professional experience in investing with the retail group that I did, with venture capital and equity analysis in the past.
And you're up to almost 1 million followers, I saw on YouTube?
Not quite, 652,000. It surprised me. And I say not quite, but it is an amazing growth over the last 7 years, I guess, on YouTube. And it pays the bills.
Go ahead.
Oh, I was just going to say, Joe, tell us a little bit about what you cover, what you talk about on the channel, and everybody should go out and see Joe. Bowtie Nation is something that is spectacular to see, and we want to hear a little bit more about that.
Sure. Well, the channel's called Let's Talk Money. Glad to have anybody come along and join the community. Talking mostly about traditional stock investing, as well as broader general investing topics. Obviously, it's a retail market, so it's a little less sophisticated than maybe what you get here with the VC market and early stage investing. But I try to bring people in with what they want to hear. Everybody wants to hear the next stock that is going to make them a millionaire, right? But I try to bring them in with that, and then slowly feed them the education and the information that's really going to make them better investors, not just entertain them. So it's a balancing act.
A YouTube version of Kramer.
It's very close to that. I don't know whether I like that much or not. But, it's kind of.
I watch Kramer sometime while I'm making dinner, and I get a kick out of him. He does talk really fast. To the point there's sometimes I'm not even sure what he's saying. But.
I think he's a better entertainer than he was a manager. But the guy's got the experience. It is a balance between information and entertainment, right? Infotainment and influencer era that we're in. So again, I gotta bring people in with what they want to see, but then I try to give them a little bit more than they're going to get on the TikTok videos about the next 5 stocks to make millionaires.
Well, and we do a lot of work with content creators. We work with Jake Paul, we work with Lucy Go, Fallon Fatimi, who runs Fireside, and Lucy, who runs Passes. But we don't do any work with the, I would say, business influencer. Is this a rising thing, Joe? Kramer is obviously very famous, but he's a CNBC guy. What's the business influencer? Is that something that is becoming extremely popular, or are you one of a kind?
Oh, sure. It's still, I'd say my success has been obviously unique. I'm within the top, 0.5% of content creators as far as revenues and growth. But it is the influencer era. You ask most millennials, most Gen Zs, and they're getting their news off of if it's not X, then it's YouTube or TikTok or any of those social platforms, rather than their traditional, Fox News, CNBC, that kind of thing. So it is definitely an era of creators.
Yeah, I think Trump figured that out in the election much faster than Kamala.
Yeah,
I mean, he hit the podcast circuit big time. I think it really paid off for him.
Yeah, absolutely. Rogan, All In. I mean,
sure.
It's on all the big ones.
Yeah.
Who's your core audience, Joe? Demographic wise, and
Sure.
Yeah.
Well, with investing, it's tragic, but it is true that women do very little investing, and I've tried to bring more women to the channel, but even female content creators still have a very much predominantly male audience. My own audience is about 85% male, 15% female. Even the most female focused or female content creators, they'll see maybe 70% male, 30% or 30% female. So it's very much male focused. The demographics, that standard bell curve from 24 to 64 years old. So it's going to be mostly obviously with investing and your capacity to invest and your the money you have available. It's going to be mostly in the mid 30s, late 30s, and into the 40s.
And Joe, what's the business model?
Sure.
Is it? Are you a subscription? So can people subscribe or pay for a subscription, or is it free and it's all
No, I've tried different business models on it. I've tried the subscription model and have really settled into kind of a 4-part model that's almost no subscriptions. I get about a quarter of my revenue from just YouTube ads, right? Those great little commercials that YouTube serves up before and after videos and during sometimes. So I get about a quarter of the revenue from there. I get about a quarter from sponsorships. So companies that want me to talk about their products, I'll place maybe a 45-second call to action within the video somewhere about their company, about their product. Affiliates, where maybe a platform or a or an investing site wants to talk about their product. So I'll do that, as well as my own products, my own courses, options investing course and a stock trading course that I did with another YouTuber as well. So about a quarter from each of those.
Okay. And how do you grow the business? Like, what's your customer acquisition strategy?
Sure. It's content. Content is king, right? That's really the key driver. Obviously, you want to make quality content. You want to make engaging and entertaining content. So everything has to be edited professionally. It has to entertain as well as inform. But it is by and large just making more and higher quality content that is going to bring people in. It's going to keep them watching through the entire video, and it's going to have them coming back. So I do 3 videos a week, generally 12 to 15 minutes each video. I do a weekly newsletter that just kind of outlines or updates the market. And I do that every single week. I've got a little over 1,200 videos on the channel.
Oh, wow.
That's awesome.
That's great. So in looking at the market, as we do from venture capital, we've been we talk a lot about this. We've been kind of in a 2-year hiatus in M&A. Not much happening. And that's kind of a trickle down from the IPO market, from private equity down to venture capital and down to, we're at the very, very beginning of it. I don't like to say bottom, early stage venture capital. Do you see signs of life in the M&A market now the election's behind us? And we hear Klarna's applied for their IPO, which we actually sold one of our companies to Klarna, so we are a stockholder.
Excited for that one.
Excellent.
Yeah, but
sure.
Be curious is how you see 25 shaping up from that standpoint.
Well, we're definitely in that that hope stage of whether the IPO market is going to come back. Right, for so long,
I've always been told hope's not a strategy.
Hope springs eternal. Right. I mean, for so long. Well, one, the regulatory burden has just been pretty intense. FTC blocking mergers and that kind of thing. So a lot of companies, given the choice, they didn't or couldn't, provide an exit. And with the liquidity that we've seen, especially with venture capital and some of the other private markets, they haven't needed to. right? So you've seen a lot of these companies where in the past they would have sought an exit when they reached that valuation of.
They would have already IPO'd.
Yeah, they would have already IPO'd
Yeah.
at 5 billion, 10 billion, past the time to IPO. And now you see companies like Klarna. That I think Klarna is pushing $50-100 billion.
It was, and now the last round was at 5. I think the IPO will be somewhere around 10.
So that
right, yeah.
But you got other Anthropic's like something like $46 billion.
Stripe is
Stripe,
90.
great. These
so
companies they just have all the kind of.
You're
Sure.
starting to see the IPO market heat up.
We're hoping, well, with that Klarna, with some of the other announcements and deal announcements, we're hoping that the IPO market comes back. Obviously, I think the M&A market will loosen up here with a little bit different regulatory environment.
Yeah, we think Lena Khan's going to be gone from the FTC.
Oh,
she's halfway out the door, as we said the other day.
Gensler's already announced his departure. I think Khan is very close on his heels, and that'll set a different mood.
Joe, you can't turn on CNBC without seeing anything about crypto. Tom and I, we always talk about it. It's Bitcoin specifically over the last 6 months has been such a great asset to own. Where do you stand in terms of the crypto market and your audience in terms of the crypto market? I was looking for some videos on that, but I didn't see any on your channel, and maybe I missed them. But maybe that's by design.
No, I haven't really covered crypto a whole lot. It is something of an enigma, right? The hope was that it could be used in all these kinds of Web3 applications and these different use cases, and we just haven't seen those develop yet. I think that's been pushed out by the ideas around AI, but we just haven't seen the use cases really develop for crypto. So again, it has to fall back on a store of value, right? And really, the only way to value that is through some kind of social media type valuations that you can do. So I haven't really touched crypto a whole lot, other than I do have an interesting theme on tokenization and how that's allowing for fractionalization in businesses and how that role of the blockchain is kind of an emerging tech shaping investing and venture capital.
Well, and we've seen that too. I mean, we've gotten pitched over the years, tokenize your fund so that you can have liquidity throughout the fund cycle. I have not yet seen that put into practice. Have you, Tom?
No, I think a lot of it's been the whole issue around, the SEC saying that tokens are actually securities and not really saying, kind of being nebulous about that and not being clear that what the rules are. I think a lot of the crypto world really just wants to know what the rules are and wants the SEC to come out and say, these are the rules we're going to play by. So, and they haven't done that for the most part. So hopefully with the, Trump ran on a crypto friendly basis. I mean, that was one of his I think it was brilliant because it was one of the, he was going after, he needed the youth vote, young men to vote. And that's mostly who's involved with crypto. Kind of like you were saying about most investors are men and, would all like to see that change, but it is what it is. And I think he was able to leverage that and say, hey, we're going to embrace this. We're going to regulate it and make it fair. And so it'll be interesting to see. He hasn't named who's going to be heading up the SEC yet, has he?
No.
Gensler just said he'd stop it. And we've actually have seen, I actually did, for my own part, I did a tokenization of my YouTube revenues, of the YouTube ad revenues. That's that section or that portion of the business. I've done 2 funding rounds, raised just over $250,000, and sold something like about 32% of the YouTube ad revenue. So each month that ad revenue goes into an escrow account, gets broken apart into all the investors, the investor cap, the cap table that it has there, and it's all handled through that tokenization. Each investor bought a number of tokens for to represent a percentage share of that ad revenue. So it has kind of opened up that in the creator economy, and I think it'll expand, like you said, as we get more guidance from the SEC. Then it'll open up to fractionalization of more businesses, I think.
So Joe, I'm curious, why'd you do that? Like, what's your long-term plan there? What are you thinking?
Sure. Well, and for a lot of companies, obviously that those funding rounds are instrumental. They're the lifeblood of keeping the company alive. That cash is oxygen metaphor, right? For myself, it was more of growing an investor community, right? With content creators and the influencer era, we talk about the 1,000 true fans, right? The fans that always come back, always follow what you do, always buy what you put out. Well, what's more committed than someone who has a vested interest in the business. So I wanted to create that investor community, let them in on the business and help them watch it grow. So it's about 700 investors that came on through those two funding drops, and it's been very very successful. And again, bringing on a committed source of viewers and cheerleaders for the channel.
Now, does that token trade? How does that work?
It doesn't yet. They're in the process. The platform that I run it through, called Gigastar, they're in the process of setting up a secondary market, so a secondary exchange for it. To my knowledge, it's going to be basically the first secondary exchange of creator tokens. But that's obviously, like all things through the SEC, it's taking longer than I expected.
Oh, interesting, very interesting. So, when I look at the public equities, it seems like the market's trading at an all-time high in terms of valuations, and there's been it's kind of getting back to. It appears almost like with Nvidia driving a lot of this, and that now I've seen. I mean, just SoFi's up 100% this year. I mean, I could pick and then anything that has an AI. Anything to do with AI is just way up. And some of these companies aren't profitable. Many of them aren't profitable. Many of them have very little revenues. I think I was looking at a company that had $9 million in revenues. It's valued at $1 billion. I'm like, wow, geez. Are we in a bubble here, an AI bubble potentially? I mean, I think NVIDIA is the real deal. And obviously they're real companies, but there seem to be a lot of people kind of
using the AI term
using the AI.
to get the value.
Oh, it's .com all over again. And
that's what I'm wondering.
I don't want to bring back old traumas for people, but there are companies that, and I saw one today, just kind of researching for a video, looking at different stocks, a company that just had AI in its name, and you could see that in the past it hasn't been called that. It hasn't promoted its AI bona fides, but now it is. Now it is an AI company, and the stock has performed commensurate with that. So we are definitely in some kind of a bubble. I think a lot of it, obviously, there's huge opportunity, huge potential with productivity for that AI being placed in different use cases, but we're years away from really seeing it across the economy.
We even see it with companies that pitch us on stage.
Yeah. It's all the
every
time.
company that comes in to pitch us now, they're an AI company. And then, it's kind of, we see it as part of our job, our due diligence, to really dig in and say, okay, wait a second. Tell us about your AI stack. Tell us about your data scientist. Like, are you just using ChatGPT, or what do you really have here? Do you have any IP, or, are you just really doing,
Sure. And in part, you've got the largest, the Magnificent Seven, right? The biggest tech companies, the Apple, Amazon, Google, NVIDIA itself, feeding into this by, not only investing directly in these other companies, but, investing in their operations, giving them loans, as it were, to be able to buy the chips and buy the servers and buy their services. So it's really a cycle of trying to nurture, but also just keeping those revenues showing up, and that revenue growth showing up, not just for the big tech companies, but also for the smaller ones with AI in the name.
Well, we just saw yesterday $4 billion investment from Amazon into Anthropic, right? Mm-hmm. So they're getting in the market big time, just like everybody else. So
yeah. Who was it? One of the CEOs remarked, it was either Google or Amazon, Sassy there with Amazon, that remarked that they're overspending, but they have to. It's a race, and those races generally don't end up good.
Yeah. Well, we've talked about this a lot over the years at Florida Funders and on the pod. As I look back over the decades and decades I've been in tech, every time a new disruptive technology came along, it was never the incumbents that really made the leap and dominated. In fact, quite the opposite. They usually got left behind. And so when think about the personal computer when that came out in the early 80s, Compaq and Apple, Microsoft were the dominant companies. The IBMs and the digital equipments got left behind. I could use the same example and over again. So but I'm wondering and be interested in your opinion on this, Joe. Is this going to be different? Are the Mag 7, maybe it's a Mag 8 or 9 or 10, whatever, are those companies really going to be the dominant players in AI? Or is it going to be the startup? Is it going to be the ChatGPT, the Perplexities, companies that don't even exist right now, some kids in their garage, planning this out, that are going to be the dominant players?
Sure. Is this time different? Is that what you're asking?
Yeah.
Right.
Exactly.
Because that always works out.
Yeah.
It's hard to say that a company with $3 trillion market cap, $2-3 trillion market cap, doesn't have the financial power and scale to really push itself through. So you've got the Magnificent Seven. They are buying their survival, right, by investing and by acquiring these other companies. Obviously, it's a matter of degrees. Those companies will still be around. Will they be the best investments? Probably not. It's harder to grow from 3 trillion to 6 trillion than it is to grow from that $1 billion unicorn up into 10 billion or 20 billion.
To a certain extent, the big companies are always a victim of their own success. Exactly. They start off young and scrappy and entrepreneurial, and then as they get bigger, they get bloated, and they can't move quickly, and they can't do anything fast, and they've got tons of bureaucracy and overhead. I think Google is a prime example.
Perfect example of that.
Sure.
Sure. The average Googler makes what, 600,000 and works 5 days a month. I'm probably exaggerating, but there's a lot. I think there's some truth in that. I can only imagine what Elon could do with that company. But
sure. But so AI is almost definitely overhyped, overvalued in a lot of its forms. But if you look back at the .com, then it wasn't that technology and a lot of those companies weren't good long-term opportunities. It's just some of the air had to come out from that. That's when it did in 2000 and 2002, and then they became great buys once again. You look at Amazon. Is a great example. Right now, I think aerospace and defense has gotten kind of left behind. But as we see that's VC funding for the group is strong, and it's really that third rail of government spending that will never go down. And we're starting to see more deals open up for that as well. I think that's kind of an undiscovered or underappreciated segment of the market.
Well, and we're seeing some bottoms up on that too. I mean, we never really saw that many DoD dual use deals, but now I think with AI and we're seeing a lot of that these days. I mean, being in Tampa, I think probably helps, but we're seeing a lot of those deals.
We're definitely seeing a lot more space deals.
Yeah.
There are a lot of public space companies, or a few public space companies. I don't follow a lot of them, but they seem to be a bit overhyped, and space is really hot. Mm. We're doing our first space deal. You want to talk a little bit about that?
We got a company called Stoke Space that we're going live with. It's a late stage company. Our fund is not investing in it, but we're going to put it up on our network for our investors. A new program that we're offering called FF Alts. So it'll be our first non-fund deal that we're going to put up there. But we're excited. Company's valued at about $1 billion, and their product is really competitive or similar to the SpaceX Starship, I believe it's called.
No, I'm sorry. I don't believe so. Starship
which one
is the big rocket they're going to take to the moon and maybe to Mars someday. They want to compete on the low end of SpaceX's market in satellite launching.
Yep.
So they think they can build a rocket for a totally reusable rocket for about
reusable,
like a 60th of the price that they're being produced at today. And really, it's all about satellite launching. The team is impressive. It's all folks out of Blue Origin, SpaceX, NASA, and Bill Gates is one of the original investors.
0.72, the Harvard Endowment. I mean, it's an exciting opportunity.
Yeah, we're super excited about it.
Joe, to talk a little bit about venture capital. So that was your background, public equities, VC, and then you became this all-star influencer. What are some resources in terms of digital content from a venture capital standpoint that you follow and that you tell your followers to check out? Tom and I are huge fans of the All In Pod, but that's just one. What are some things that you follow?
Sure. Well, Again, I've on the VC side very little because that's generally not what I cover on the channel. And of course, there's always the problem of who am I talking to? Retail investors, accredited investors. I do have about on surveys I've done about 35-40% of the audience is accredited, so they would be able to invest in those. But generally, the larger part of the audience wouldn't even be able to invest. So I still follow just the old fallbacks, PitchBook, Crunchbase, things like that, just to get the information and the ideas. There are some platforms that I've seen that have opened up the market a little bit as far as seeing that more liquidity in the secondary market. So things like Link2, which I believe is buying shares of pre-IPO companies or early stage companies, selling them to investors through basically through a markup on what they bought on the secondary market.
Yeah, and that really, the secondary market over the last 2 years, as Tom started the conversation talking about the illiquidity in the market, the secondary opportunities have really been where the majority of liquidity has come from. And we've seen that with one of our companies. We just had a secondary sale of a local company here in Tampa called Roost, made a really nice distribution. So yeah, we were really excited about that one. But you got to get creative, and that's what venture capital and entrepreneurship's all about. When one avenue is closed, you got to figure out a way to open up another one.
Sure.
Tom, you want to do lightning round? Is it time?
Yeah, I'm checking the price of oil. That's what I'm. What is the barrel of oil right now? Is it 68?
69.
69.
Right around
Okay,
69.
That's going to be one of my questions, so we'll get to that. So this is real quick, Joe. Just one quick answers. I'm going to ask you 5-6 quick questions, and don't think about them a whole lot. Just give us your opinion. I'd love to hear it. If you could own only one stock right now, what would it be?
Oh wow, I would have to say SMCI.
SMCI, is that
super microcomputer?
Super micro
fell on the delisting
with all
fears.
the investigation.
Yeah, fell on the delisting fears. It's up something like 80-90% over the past week. I think there's still a little bit more upside, but it is really the only pure play on that data center build out and server solutions theme. I think.
I wish we'd had you on a week
I was going to
ago.
say, thanks for the tip, Joe. I really appreciate it.
So the upside is more limited now, but I think it's still.
Did they get an auditor? Did they get somebody to audit them?
They did. BDO, which obviously isn't one of the big boys, but it is a legitimate auditor, and no word from the NASDAQ on their delay for the delisting, but it'll go through to February, and that'll give them enough time to file.
So I got to ask you this: at this point, NVIDIA sits at 140 a share, whatever it is. Are you a bull, a bear, or are you holding?
NVIDIA, the comparables are just too tough for NVIDIA. It's coming into a year, 4 quarters where the comparables against last year's growth are going to be so tough. I think investors are going to start questioning the valuation when they see that it's not growing at 100% a year again. So I'd wait for a pullback before I'd really get into it.
I was asking this question. I ask this question a lot. When does Bitcoin hit $100,000? But it came this close like last week. It's down to like 93. So I'm going to change a little bit. When do you see Bitcoin hitting 200,000?
200,000. Wow. Okay, so this is just going to be completely out of my wheelhouse. But let's say next year, into next year, 200,000.
All right. All right.
Okay. And then. So, Trump ran on a platform of reducing inflation, but a lot of his policies actually could potentially increase inflation, but especially the tariffs that he has suggested. Do you think we've bottomed out on inflation? The boogeyman's gone, and we've tamed that dragon, and the Fed's going to keep cutting rates, or do you think? Not so quick. Hold on here. Inflation's going to be coming back.
Well, I think Fed cutting rates, I think will continue just because if we see some of those inflation raising policies, then I think it'll also have an effect on the economy that will necessitate lower rates. The tariffs, Trump just came out and said day one he's going to want 25% on Mexico and Canada, 35% on China, and I think. It's crazy that after 8 years of Trump coming down the escalator, right, at Trump Tower 2016 or whatever. People haven't understood that he uses this as a negotiating tactic. Okay, he always starts.
I think he wrote a book called The Art of the Deal.
Exactly. He always starts way high, fire and fury, all of that. And when we actually see what he actually, it's basically just, trying to scare the other side into negotiating. He knows, Trump's biggest measure of his success in the presidency is the S&P 500. And it's fairly obvious.
And my understanding is he's obsessed with it.
That I would not doubt it. He is, and
he wants the stock market to keep rolling.
Exactly. So I think it takes very little time for him to realize, if the other side doesn't come to the negotiating table, give him some wins, then what those tariffs would do to the S&P 500, to the economy, and among other things. So I think a lot of this is cart before the horse kind of thing. I think inflation. Yeah, I think it stays pretty stagnant here. Right now, we're seeing persistent inflation, so it isn't coming down nearly as quickly as we would like. But I think that natural rate for the Fed is so much lower than where it is now. It's in the low 4, high 3s, probably should be. So I think you see rates keep coming down, even if inflation doesn't come down at the same rate.
And then my last question is really getting to the price of oil. We're sitting at 69. My personal opinion is this is how he's going to drive inflation down in a big way, because so many things, as we all know, are tied to the price of oil. And we're at 69. Where do you see?
That makes sense.
If we look at a year, what do you think the price of oil is?
I think lower. He wants to drill, baby, drill. I'm not so sure the U.S. Producers are all up for it, because obviously they want to keep their reserves and keep the price high. And if they're drill baby drilling, then they're eating through reserves faster, as well as seeing that price fall anyway. So I think they aren't going to be as receptive to that argument as Trump or many would like. But if we do we've seen some movement on negotiations, a ceasefire there in Israel today. We've also seen, Trump on day one is going to negotiate the end of Ukraine, or the Ukraine conflict. And we'll see how that turns out. But with this geopolitical, those two main geopolitical events, hopefully putting on the back burner over the next year with record high U.S. oil production, it's hard to see oil remaining at this $70, which is really a fear premium in the market. Now, that said, a lot of oil stocks are cash flow positive, all the way down to $50. So I think the oil stocks will will do relatively better, but oil lower, yeah, definitely.
Yeah. All right, Joe, this has been great.
Joe, this has been awesome, and
pleasure.
Thank you everybody for being here. If you enjoyed hearing Tom and I and Joe today, please go to our channel, throw us a like, throw us a follow. One day we will also have 650,000 followers, right, Tom?
That's right.
That's our goal. Joe, thanks
Joe.
Again.
Really appreciate it.
Great to see
Tom
you.
Saxon, good talking to you.
Yeah, absolutely.
Bye.
Thanks for spending your time with Skin in the Game VC today. If you want to learn more about investing in early-stage tech like a venture capitalist, be sure to visit the Florida Funders website at floridafunders.com. Join our angel network at no cost and get access to Florida Funders VC-vetted investment opportunities in the next great breakout tech companies.